All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market been open here for about an hour, and it's been quite interesting here over the last little bit. We saw a nice little rally into the close yesterday, where we saw the market shoot up 20 points. And this is the type of thing that we tend to see in bear markets, not bull markets. Seeing that big of a pop in that short of a time, yes, the market's going higher, but no, that's not a characteristic of a market that's turning bullish or is bullish in the short run. It's oftentimes a characteristic of a market that has more sell pressure waiting to come in. But it is something where short-term traders get squeezed, or a lot of times where the algorithms are playing for the day, they're playing lower on the day, and they know they have to get out, or they're programmed to get out by the close, and so you see a lot of buy orders coming in at the close, and so we saw that yesterday. Here the market gaps up here today a little bit. We get back towards this 2,900 level, and it's okay. Is the market changing? Is it shifting here a little bit? Let's go out and talk about that. But before we do, challenges in all cash. There are no signals on the board here this morning. We do have crossovers to the upside on things like Visa, but the consolidation risk on that is very high as it sits at the moment. We could see that change by the close, but I'd be surprised if it did. We have Twitter, which is a really nice chart. When you just kind of go look at quality charts out there, Twitter's just one of the best pure charts out there. It is not triggering here this morning. Could by the end of the day. We'll kind of see where that shapes up here as the day progresses. No downside signals here just yet. Not a lot of downside 3-7 crossover action. If we come in, I'll show you kind of where those lie. We saw a lot of 3-7 downside crossovers come in on Friday, but we didn't get bearish signals, right? And I was a little bit surprised about that. I thought, okay, we're going to see some. Let's go, but none came in. We've basically seen the market bounce since. We have AT&T with a downside crossover today, but coming off of a new high. Not exactly something that has a good chance of triggering bearish here for us. But I titled this video "Cat, TLT, Banks, and Bearish Confirmation" because I want to go look at all four of these things, as I've been asked about all of them. Let's start with Cat, right? And I've been very vocal about Cat and what I think about Cat, and the fact that, look, if you are playing the trade war, if that's what you want to play and what the market is thinking or doing as far as the trade war goes, Caterpillar's your play. And when I wake up in the morning and I see Caterpillar up fractionally, market futures up nicely, Caterpillar barely higher, and the headlines are saying, hey, market's going up because of trade war, optimism and all that, hogwash. No, not at all. That's not the reason. If we were really seeing trade war optimism, we would see Caterpillar start to stack in the gains. We would see some sort of move on Caterpillar like this back here in December. But the reality is we are not. And so to say that the market is pricing in some sort of resolution to the trade war, I think is just absolute, just headline speculative garbage that really isn't what the money is doing out there in the market. And so it's one where, look, if you think things are going to get worse with the trade war, you short Cat. You think things are going to get better, you long Cat. I wouldn't be surprised if we see some nice little support here at 110. We see some dip buyers start to come in around that level. But when I wake up in the morning, market's up and Cat, it really isn't. that just kind of tells me, hey, you know what? This is not trade war related. This is something that I need to be a little bit cautious here with. The other factor out there that we've talked about in this market has kind of changed to be a market where bonds up, stocks, down. Bonds down, stocks up. And you can see that, yesterday bonds fell, right? Bonds fell a little bit, market was up. Today, bonds are rising again, and that's with the market, gapping up here. I'd be very surprised if the market ends today with gains and TLT doesn't push on lower. If TLT keeps pushing on higher, I'd be very surprised to see the market end with gains. But it's one of those where you look at a gap up in the morning and you go, okay, stocks, equities, they're gapping up, but bonds are not. Or excuse me, bonds are gapping up as well. Not exactly a market I want to be a buyer of right at the open. What have we seen with the TLT up? We have seen the banks pretty much get sold since the open here this morning. The XLF, you look at Bank of America, gapped up this morning, is fading. JP Morgan gapped up this morning, is fading. And so, we see this dynamic between, the banks, with Caterpillar, that just kind of go, okay, these are two of the trouble spots in the market. They are not strengthening here today. That's not a sign of, hey, you know what, all in for the bulls, let's go type of a day. And one of those where reversal risk is fairly high when we see this. Now, I also talked yesterday about this idea that, path of least resistance is lower in the market, but I want to see some bearish confirmation. And I was asked, what would I be looking for bearish confirmation? Now, if we're talking about the overall market, I'm looking for a few things, right? I'm looking for how it rallies, right? And when we look in, let's just come into here, right? Let's get rid of all our indicators, and I'm just going to pull a chart of the market up. This is a theme that we've talked about during this recent market action. Let's come in here. I'm going to put some gaps in between the candles, just so we have a little better visual here. All right. So we have a market and it sells off, right? Beginning of August. It bounces a couple days, and then it has this day right here. And, one of the things we talked about at this time was, look, if you're looking for downside action, right, what you want to do is take a look at the low from the prior day. If the low from the prior day gets broken, you're probably looking at something where the path of least resistance is lower. It can be choppy, and so you have to use the high of that day as your stop point. But we break the low of the prior day, chances are pretty good that you're okay to play some things lower. Now, in this case, we got one whipsaw up day, and then this next kind of drop day come into play here. So we have now we have kind of some bullish action coming into play. Okay, is market ready to break higher? And it doesn't. It gets hit with the news and the tweets, and boom, big down day, right? So as it sits right now, not willing to short on that. Okay, not willing to short yesterday, with any sort of aggression. But now today we got this kind of just type of a candle. What am I looking for? Well, I'm looking for the lows from the prior day to break. So in this case, it would be all the way down here. Okay, so am I going to get a bearish confirmation kind of just using this simple candlestick method today? Probably not. And if I do, something dramatic probably happened, right? But, let's just say the market chills out. By the end of the day, this is what it looks like. And it's just kind of nonsense. Well, we gap down or we break today's lows tomorrow. There's some bearish confirmation there. Now, confirmation doesn't mean, it's 100%, your way. Confirmation simply means the odds are in your favor. right? They're depending on the type of confirmation, but the odds are definitely in your favor. Now we are seeing some stocks that are breaking below yesterday's low. Excuse me, they're breaking below yesterday's lows here today, but this is just kind of looking at the market. Now that's one way to kind of look for some bearish confirmation. Another way that I've talked about looking at is the bullish percent index, right? And the bullish percent index, and seeing the bullish percent index break this recent low. It hasn't, right? It hasn't done that. We have seen the bullish percent index hold up pretty well, despite what happened on Friday. Is that a bullish sign? No, not where it sits. But, if we start to see the bullish percent index breaking down here below 46, that's a pretty good sign of some bearish confirmation. The third thing that I would show you to kind of look at if you're looking for bearish confirmation is a number of stocks in the S&P trading above the 7-day moving average, right? And here we have 169 trading above the 7-day moving average. That's a really low number given what the rally was yesterday and the gap up today. That's still a pretty low number. But what I would want to see, I want to see this number push below 100. This number pushes below 100, chances are there's going to be some continued follow-through there to some of the selling action that we saw on Friday. As I mentioned yesterday, perhaps one of the biggest risks for market participants out there is just a kind of just non-committal market that doesn't want to go anywhere. A market that, chops up a little bit, chops down a little bit, but you'll notice the Bollinger Bands are contracting, right? And, if we break the lows, chances are we're coming down to the 200-day moving average. But you know what? Going into the end of the month, not a lot of news. Are we going to see a market that just, flutters through, this 290 zone and gets sold over 290, gets bought under 290 here on the S&P? And I do think that is the biggest risk out there, barring any sort of massive news on the trade front. From the Fed or any of the areas of wall of worry that we have talked about here recently. Okay, so hopefully that helps in terms of some of the bearish confirmation. But yesterday we saw gold up, we saw the VIX up, we saw the market up. You just don't see those types of things very often. But it's August, right? It's August, and when do we see some of those types of anomalies? In August. Sometimes in October, sometimes in February, but most of the time in August. And that's what we have here. Okay. All right. So staying in cash here for the challenge, and we'll take a look at where some of these things are by the close. I'd love to be jumping into some things, but at the same time, I'm not going to force it if there's not a signal present. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.